Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, April the 20th, 2020, and this is the daily report for gold and silver. Interesting action to begin the week with crude oil actually going negative in the front month, at one point down over 300%. It has recovered slightly, but it is still in the negative. Of course, the outer months are sitting at around $20 to $23 in the first months it came in, and that, of course, was very bullish for both gold and silver. We also identified a simple two-day pattern in the daily candlestick chart, but that pattern requires confirmation, and we'll talk about that in detail when we pull up our technical studies. But first, to the price board. I'm going to start today's look at current pricing by looking at crude oil, because that has affected in a very bullish manner the precious metals market, specifically gold and silver. Crude oil fell to a historical negative level, the first time in history, closing down currently over $31 and is priced at negative $13.10 per barrel. Gold did move moderately to strongly higher, $17.1240 up $13.60. which most importantly puts it back above $1,700 per ounce. In terms of spot gold itself, it gained about $10.50 at $1,692. Platinum had a 0.4% gain, $788.70. Palladium lost $14 at $21.16. And the star today was gains in silver, resulting in a 25-cent move and fixing the May contract at $15.55. Let's take a look at our technical studies, because we have identified a very important pattern that has occurred in gold. Today's gains resulted in the identification of a simple two-day pattern simply called a piercing line. Now, a piercing line occurs after a defined downtrend. We have certainly met that criteria, where the first candlestick of the pattern is a long red candle. On the following day, meaning today's candle, it opens below the closing price of the prior candle and then closes at or above the midpoint of that red candle. That would be a piercing line. Now, typically what we want to see when we get this candle type is a confirming candle. Now, a confirming candle for the piercing line would be something where you had a market day in which you had a green candle. That's the most important thing, with a higher high and a higher low. It would look something like this. And that, of course, is what we will wait for as the afternoon session opens in just a little bit. It is now 12:08. The Australian market has just opened up, and when we look at current activity, it has not opened up higher. It's currently in essence unchanged, but we don't see green yet. We want to see this particular day's candle move to the upside and be a green candle. If in fact that happens, we will issue a signal to enter the market from the long side. In terms of our stops, we're going to look to put it below 1680, which is the 21-day exponential moving average, and also lines up with the 50% retracement right here. There are other things that we look for in this particular kind of scenario. First of all, I have just added the MACD, and we want to see a divergence. We want to see that these two averages are moving apart. They definitely have. Now, they've narrowed a little bit, but they are still in a divergence. A convergence would be a scenario like this right in here, where what we are witnessing is the lines moving closer together right here. However, what we have seen recently is lines moving apart. However, they are narrowing just a little bit. The other thing that is important, and a rationale behind looking very closely at taking this position on, is the fact of where the lows came in, just above, as I said, the 50% retracement and the 21-day exponential moving average. The next chart I will look at is a 4-hour candlestick chart. We used this chart to look at a short-term inverse head and shoulders scenario in which we defined a breakout right in this area at 1700. The market then traded to the all-time yearly high of 1788 and then came down. Now, here's what's interesting. If you look at a series of tops right in here, what we get, this is where these two blue lines are, what we get is the fact that we had a close above that. That is also significant and indicates the real potential that gold will move higher. Lastly, I do want to look at this daily candlestick chart. We've got the exponential as well as the 50-day moving average, but we have various levels of support and resistance, which of course I have adjusted since the market moved down over the last week. And what we have now is we have our first level of support coming in at around 1700, 1698, and that's the area that we just spoke about as a key and critical area to hold. In terms of the next level of resistance, that doesn't come in till about 1723, and that of course would be minor. The next level above that is 1751, and then 1774, and of course our top here at 88. So those are the various levels. There's quite a few of them, but right now when we look at this chart, we have not opened up much higher, although we're looking at a candle that's still pretty much at the close. You can see that right here. We really want to see this new candle forming become a green candle and really move above the particular close that we had today, which it currently is just at, but I would like to see it begin to move above the intraday high that was achieved just a couple dollars from here. If that of course occurs, and especially if it moves above 1725, you will get a special trade alert recommending that we enter the market from the long side. So we want to watch the market very carefully this afternoon in Honolulu and see if the market can turn green in terms of today's candle, this candle right here. And if it doesn't turn green in Australia, it certainly could in Hong Kong. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.